Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 20th, 2017. Now, for this week we do have a holiday short week with the US Thanksgiving. So when we're looking at things right now, we want to make sure that when we start our week in our Forex trading, that we're paying very close attention to the US dollar index. Now, as I talked about in last week's Forex Weekly Outlook, the dollar tends to put a bottom in usually around the 15th of the month. Now, I had talked about this in last week's Forex Weekly Outlook, and we see that that has come to fruition. The dollar made a big push down on the 15th and has done absolutely nothing since. Now, when we look at our signals from VantagePoint in our analysis, we can see that we've had a fairly substantial move to the downside, but that move appears to be coming to an end with the medium term crossing over the long term predicted difference to the upside. Now our neural index is still down, so Monday is still likely to be a down day, but Tuesday, Wednesday, Thursday, we could see the dollar starting to recover. Now, I'll further point out that the dollar took a hit against some of the main currencies on Thursday evening when it came out that subpoenas were being sent to the Trump campaign. Now, again, this nonsense really does need to end. They either need to lay a charge or drop this matter. I don't believe personally there's anything to it, anything more than there's been in the president's past. Who knows? But it does cause havoc in the markets here, guys. And again, there's very little evidence of any wrongdoing, at least at this particular time, but they keep bringing it up. So every time a subpoena is issued, the dollar comes under pressure, but you can see that it immediately recovered. Now, how is this affecting some of our main intermarkets? When we look at gold, again, I talked last week and I suggested that gold is likely to put a top in around the 15th of the month. It did, but then gold had a big day on Friday. Basically, when the Asian markets opened and Mueller announced that subpoenas were being issued, gold went right through the roof. So again, this is noise, guys. That's all this is noise. And the market overreacting to something in ultra thin illiquid markets on Friday trades. So gold has pushed through the range here, but usually whatever happens on Friday, the exact opposite happens on Monday, Tuesday of the following week. So right now, looking at these signals from VantagePoint, it's telling me that the downside move in the dollar is likely going to be limited. Now, we can further assess that the S&P 500 also sold off on that, but on the 15th as suggested, but with the high correlation the S&P has to the US dollar index, we can see that the S&P has already started to recover, and we're holding that critical VantagePoint 18-day predicted moving average at 25.74 with a close of 25.76. Now, the reason why this is important to look at the S&P, because it will have a direct effect on currencies like the Swiss franc, the Japanese yen, and indirectly the US dollar. So when we apply that to the euro, once again here, guys, I made a strong case in last week's Forex Weekly Outlook that institutional flows dominate around the middle of the month, and we can see that the euro pushed very high all the way up to the 118.50 on what I would call mediocre data out of the Eurozone, only to turn around and set up a bull trap here. So when everybody starts getting long on the 15th, you can see that the euro immediately sold off the next 2 days. Now, we do have the 8-day crossing over the 18-day predicted moving average, but a signal here that is troubling is, of course, that medium-term crossing over the long-term predicted difference in the opposite direction in which the market's moving. So while the market's moving up on Friday, you can see that the VantagePoint indicators are moving the opposite direction, the neural index and those predicted differences. So I would look for a retracement back down to this 117.04 area. To begin the week, be very, very cautious of a bull trap here, guys. And again, the indicators from VantagePoint not only tell us when to get into a trade, but they're very effective in telling us when to get out of a trade or not to enter the trade, period. So if the market really wants to get long on the euro here, it's probably going to be down around this 117.23, 117.04 area. So letting it retrace back to that area, but be careful of a false break above 118.50 because the indicators from VantagePoint at this particular time are very mixed. Now, with US Swiss franc basically mirrors the Euro US goes up, US Swiss franc goes down. But for next week, 98.50, where we put our bottom in from last week, and again, that indication from VantagePoint is warning that this downward move may not be that strong. So if the global equity markets start to recover, the S&P, the DAX, the Nikkei, then US Swiss franc will turn higher as the euro turns lower. As we move to British pound for next week, guys, I've talked about this one last week. We're pushing through this trend line. The critical VantagePoint indicators here that I'm looking at is, of course, the medium term crossing over the long term predicted difference and above the zero line. We're breaking through this trend line area and we're closing above 131.73, but the close of 132.08 should open the door towards 133, but again, we need to hold above the 131.70 area. If we close below that one day, guys, that's fine, but if we close below 131.70 for 2 days in a row, the pressure will then be off the top side and we'll likely be looking to go short again. But for now, the indicators from VantagePoint are saying that this thing potentially is gearing up for a long trade. Now, as we come into the dollar yen here, I talked about this extensively last week with this intermarket, the intermarket correlations and this channel we're in. So we broke down below this channel, but basically, guys, we are still in the same range that we have been in for a very long period of time, and that's between 111.50 and 114.50. Now, in my respectful opinion, the data coming out of the US, the economic data coming out of the US the last few weeks absolutely supports a rate hike in December, which will ultimately send dollar yen higher. So the only thing that could change that is if we get more political theater, and that's pretty much all I can call what the Democrats are doing right now is political theater. They're talking about impeaching Trump now. They really do need to get over this. They lost the election horribly. You guys are stuck with Trump for 4 years, but impeachment, I just don't see it at this particular, there's not enough on the table to impeach him, at least not at this particular time. So this is what I would directly call political theater on their part. I don't believe anything is going to come out of this. But in the meantime, that repeatedly puts downward pressure on dollar yen for all the wrong reasons. So when things start to turn positive with the FBI, there's no impeachment talk, then basically we go back to the real economic numbers of what's going on in the US, and things are looking pretty good, to be perfectly honest. And again, I do see a rate hike imminent here in December. Doesn't mean that that will send the dollar yen higher, but the interest rate differential between the two countries will absolutely favor the US, which should send yields higher, indirectly sending dollar yen higher. But for now, the key VantagePoint level that we need to overtake next week is 113.27. If we can get back up above that, that will take the pressure off the downside. The indicators from VantagePoint are moving towards oversold here, so I believe that the downside for next week should be limited to 111.50. Now, as we look at the CAD here, very good trade all week with my own direct clients here. We've been steady buyers of this particular pair. As I said in last week's weekly outlook, oil moved higher, but again, for all the wrong reasons. Demand is still low, supply is still high. We had that little bit of shock out of Saudi Arabia, what was going on over there. That passes and oil goes back down again. That immediately turns around and sends US CAD higher. So we've been hugging this 127.26 area all week. We're pushing off that. But the signal I talked about last week in last week's Forex weekly outlook, the medium term crossing the long term, combined with the neural index and the RSI failing to break below the 40 level, ultimately makes this a very good, easy long trade on a daily basis. Now, with currencies moving 1% of their value per day, each one of these days represents a long. So at the end of the week, you can have a very, very strong trading week, and it doesn't mean you're glued to your computer, or it doesn't mean you're only day trading the Forex market. None of that is actually accurate, guys. It's an easy trade when you know these key levels and you have the directional bias from VantagePoint. So the top of the current range is 129.20. It does look like we're heading there, again, barring any more political theater out of the US. Now, as we come to our other two main commodity currencies, again, last week I suggested both of these pairs were going lower based around the VantagePoint indicators, But Aussie US is starting to flatten out here. We can see our medium-term predicted difference and our long-term predicted difference is starting to flatten, as is the predicted RSI, suggesting we could be getting ready to turn back to the upside. Now, if we do turn back to the upside, it's likely corrective in nature to 76.56, the key VantagePoint 18-day predicted moving average, followed by 76.09. And again, if we can overtake these two levels by midweek, then the Aussie has a shot of a further recovery, but it's going to need gold moving higher. If gold can't consistently move higher, then Aussie US and New Zealand US are not going to be able to do that either. So we want to keep a close eye on these indicators for next week, but for now, the bias still remains to the downside. Now, with New Zealand US, very good trade here that I've posted, but multiple opportunities to get short on this. You can see here that I've drawn with the VantagePoint medium-term predicted crossover. I've turned that into a resistance zone here, and then backing that up with the 18-day predicted moving average. That currently comes in at 68.99. So any move to the upside has been contained by this particular key VantagePoint level. Nothing, of course, lagging about this because it's basically it's not a moving target. We know this number. Now, if we look at a very similar situation here where the RSI has bottomed out, it's gone flat for a few days and then started to rise. But right now, we're still slightly pointing down. So the main commodity currencies for next week, guys, Aussie, CAD, New Zealand, are probably going to remain under pressure. But what I will point out once again is that with the US Thanksgiving, notoriously every single year we have seen heightened volatility throughout the entire week and very volatile towards the end of the week, particularly around the equities and the euro currency. So limit your trade next week. Have a happy Thanksgiving. And once again, this is the Forex Weekly Outlook for the week of November the 20th, 2017.